believe it's on.
Okay.
It hasn't popped yet. Give it 1 second.
Ah,
I have.
oh, there it
There
is.
you go. It's ready.
Yep.
There you go.
Okay. So then I'm going to call the meeting to order. It is 10:02 by my clock.
Very good.
The first item on the agenda is approval of the minutes of the February 17th meeting. Did everybody have a chance to review them?
Yes.
Kate, could we do an introduction?
Oh, of Glenn?
Yes.
Yes, so, Doug Gillette has resigned, retired and all that, and ably taking his place is Glenn Rybecki. Glenn, why don't you get yourself on the screen so we can see you and say hi?
I've got my video on my side here. I don't
There we
know
go.
Oh, okay, good. No, thank you very much for letting me participate in the group. I had followed along with Doug on certain things, and when he left, I kind of couldn't move fast enough to try to join you folks. So, so here I be now, and hopefully can contribute to the level that I've seen everybody else do.
Well, we look forward to having you with us. Thank you
Welcome, Glenn.
thank you for stepping up.
Welcome, Glenn.
Thank you.
Yes, welcome.
Thank you.
Okay, back to the minutes.
Sorry.
Do we need
Do
a
we have
motion?
a,
I'll move the motion.
Okay, do we have a second?
Second.
That was Becky. Okay.
Yes.
All those in favor?
Aye.
Aye.
Opposed? And abstaining?
I probably should abstain because I wasn't here for that meeting, so I wouldn't know if they're right or wrong.
Okay. Well, so then the motion carries with, let's see, 5 in favor and 1 abstaining. No, 6 in favor? I don't have myself on the list. Okay. So first up on our agenda is the town of Brooklyn. Do we have representatives from Brooklyn here?
Yes, I'm here, Stephanie Levin.
Hi, Stephanie. Thank you
Hi.
for joining us.
Sure.
Would you like to give us a quick update before we start asking questions on the documents you sent us?
Sure. So hopefully everybody got a copy of our audit that was completed at the end of February. Our unassigned fund balance increased slightly to $888,000, $888,040. This is a little bit less than we had anticipated, and the reason for that was because there were 2 items that needed to be restated from 1819. If anybody here recalls, Brooklyn has had some issues with finance directors, and in 1819 to 1920, there was a finance director that came in, as well as a forensic accountant that was trying to help clean up the books in Brooklyn. And between the 2 of them, there were some adjustments that were made, some due to interfund, due to Board of Ed deposits recorded that were recorded in 1 year, fixed in another year, but shouldn't have been, and then they were adjusted by the auditor, and they all came out in the 1920 audit. That is discussed or mentioned on page 54 of our audit. So rather than have it hit our end of year fiscal year 20, we just did a restatement for fiscal year 19. And then at the end of fiscal year 20, we had a remaining balance of $535,000. So that got added to our fund balance for fiscal year 20. As far as our findings go, we did have continued material weakness due to internal controls over financial reporting, which I've worked on. I started in Brooklyn in March of 2020 and immediately started working on a accounting manual and oversight of this office, which I have 3 finance assistants here, and making sure that we organize the job responsibilities, who's responsible for what, and making sure that there was checks and balances on every piece that goes through this office. We also started pushing things out to departments that were responsible for doing requisitions and purchase orders and making sure that that process was working better. And then there was one other thing that I was going to say, and now it completely went out of my head. Maybe it'll come to me. I'll mention it. And then we did have, there is our relationship with the WPCA, we don't have complete oversight as much as I would like to have over that, and trying to understand the relationship between the town and WPCA has been a little bit difficult, especially this year. And I know that the first selectman is supposed to be in discussions with the chair, talk about what steps we can do to better manage their finances. And I think that's a quick summary. If anybody else has some more questions, I'm happy to answer them.
So I'm going to start with the last one you said. This is Kate Bush, by the way. You said you don't have complete oversight over the WPCA. Are they strictly a Brooklyn WPCA, or is it a joint town?
It's, I believe that they also work, they're located in Killingly.
Okay.
And so, but we send them sewer payments.
Right.
And we were sending them to a bank account that I had complete view of. And then just this year, they transferred a bunch to a new bank account that I don't see. I've sent them emails stating, like, I need to be able to see that account. I need to be able to see what transactions are coming in and out of that account. And the bookkeeper there works part-time. It's not very responsive. So
do they service other towns? You said they're located in Killingly. So do they service Killingly as well, or in any other towns?
I believe at one time they did, but they don't anymore, and it's just Brooklyn.
Okay. So who appoints the members of the authority?
I don't know the answer to that. I can ask the first selectman. He was not able to make today's meeting.
So,
but I don't believe that it is a town. It's not a. The auditor views it as a business entity.
Canvas not going to be on until.
Okay. If you are not from the town of Brooklyn or the commission, please mute yourself.
Karen wants to talk to you.
I did.
Okay.
I've got somebody in the background that we're hearing echoes and.
Kate, we have a number of guests today, and they've
mute
been
them?
asked to go on mute. Julian or Bill, could you please help and put everybody on mute, and then the members can then come back and unmute themselves? I can do it, but Kate, you'll have to click yourself back on unmute as soon as I do that.
Okay.
Kate, you'll unmute, okay?
Yeah, I did. Okay. So,
Thank you.
yeah, so Stephanie, I think with the WPCA that you need to find that information out because, and John Schuyler can maybe weigh in. If you have the appointing authority and you're providing all their financing, there should be part of your reporting entity as far as I'm concerned. John, do you agree?
Yeah. I just did a quick search, and it does look like it's the Board of Selectmen that is appointing 5 members of the WPCA.
Yeah, I think you should be able to get
Out of
better.
how many?
I'm sorry?
Oh, 5 members out of?
5 members of the WPCA are appointed by the 3-member Board of Selectmen.
And are there only 5 members?
Right now, there's 4.
Okay.
So you appoint all of them?
Yes.
I think they're part of their reporting entity.
Yeah.
I would
Unless
I
there's
should have
something else, I
people
agree.
overseeing. Yeah,
Yeah.
it's been difficult to communicate with them. I'll continue to work on that relationship.
And talk to your auditors about that.
Excuse me,
I-
they are reported in the audit report.
They are? Okay.
WPCA.
Okay.
Sorry.
All right, so the other
auditors
question-
would like to have more control over that. I would really like to put our finance system in their, on their computers and have them do it and do it as a fund, I think.
I would.
The person who is their bookkeeper is a former finance person for Brooklyn who was kind of part of the problem. So I think that the town leadership is a little hesitant to do that, but it doesn't solve our problem of not being able to see their transactions and be on top of that.
Yeah, I think that's something that you guys have the power to do, but if it helps for the commission to recommend that that they come under your authority financially, that you put them on your funds, we can maybe take a look at making that recommendation for you. So I had two other questions, just
Sure.
quickly. You said you have 3 accounting assistants.
Yes.
What level are they? Are they just clerical or are they accountants?
They're all clerical. I have a Board of Ed finance assistant who does payroll and accounts payable. I have a town payroll and accounts payable, and then I have my third finance assistant does all of the bank reconciliations and verification of deposits and manages, to make sure that everything is being recorded properly once it leaves my payroll and accounts payable people.
Okay. Have they had any specific training in government accounting? Have they, attended any GFOA training or classes?
Not that I know of, but I am open to sending them.
Yeah, I think
to
that would be.
you have recommendations.
Yeah, that would be a
Two
good
of them-
idea.
2 of them are going back to school for their degrees, and they're going for accounting.
That's awesome.
Yeah.
And then the last
So
question I
they-
had, you said you were working on an accounting manual.
Yep.
What's your due date on that?
So we have I completed the initial draft last summer, sent it off to the auditors. They reviewed it. We made some adjustments. Now at this point, it really is just updating it with various things that the Board of Finance would like to see, making changes to it. It's a live document right now.
Okay. Okay. I guess to make it easier, oh dear, Diane, you're on my screen. So Diane, do you have any questions?
I do not. I'm good. You had all of mine, actually.
Okay. Becky?
Okay.
Becky, do you have any questions?
No, I don't have any questions, Kate.
How about Mike?
I just got 2 quick questions. Stephanie, what again is the fund balance as of June 30th, 2020?
$888,040.
Okay.
What percent is that of your fund balance or of your revenue?
Of my revenue, that is a great question. Hold on.
So do you have a policy in place for your fund balance?
We don't, and that's another issue like the Board of Finance talks about frequently. There is no policy. Every year during budget season this is only my second budget season with them, but from what I've been told, having a fund balance every year has been discussed about how much it should be, and then they never said anything.
I mean, there are some thumb rules based on percentage of your expenditures.
Yeah.
Am I able to get that information from you guys? Is that something that?
Well, it's, Moody's and S&P have standards.
Okay.
And I think it'll vary depending on but you're probably going to want to have at least 10%.
Okay,
We look for a floor here of 12.
okay,
But you should have a fund balance policy, and the GFOA has some best practices and recommendations. I would suggest the national GFOA, I'm saying. I suggest you take a look at those.
okay, I will.
Okay, Mike, did you have other questions?
Stephanie, I was taking a quick look at the revenue report that you had provided, and the balance still to be collected on property taxes is 3.9 million, and it's as of February 28th. Do you guys have a quarterly payment structure for your taxes, or is it 2 installments?
We are quarterly.
Okay, all right, that explains it. It just seemed like there was still a lot to collect before the end of the fiscal year.
Yeah, yep,
Okay, thank you.
you're welcome.
Okay. Kim? I know you have questions. You always do.
Thank you, Kate. I want to make sure that you're on target to close the open audit finding that was as a recommendation, and make sure that you're going to make that target as of June 2021.
Okay. That was just the one finding that we had,
Yeah, I'm seeing one finding at this very moment.
The controls are for financial reporting.
Yes.
yeah. So we are, yes.
Yes, you're.
We're on target to be fine this year. I mean, yes, that is always my goal.
Okay.
But we have a lot of the issues that we had with the internal controls was there were a lot of journal entries being done to fix things, move things. Before the 3 finance assistants were really here, there were deposits made wherever, expenditures made wherever, and then the auditors would come in and there would be journal entries made, and then the auditors would come in and say, well, that was not all, you didn't do that right. Now I have instructed all town employees, including mine, as well as the departments, that there's a process and procedure that you have to follow. We make sure that everything is charged to the correct account as best possible, deposits and expenditures. There's very minimal journal entry being done at this point.
Okay.
We have an interfund account, interfunds accounting with iVisions, and there was a lot of issues with the interfund account prior to me. We review every month what's in those accounts to make sure that money is being sent to where it needs to go to. Liabilities are always checked. So there's I think that there's a lot more oversight and attention being paid to these accounts that nobody really ever saw or paid attention to.
Okay. Good. Back to the monthly report that is through April, and my question there is, are you on target for your projections? What are you projecting that you're going to end the year with for fiscal year 21?
So in revenue, and actually since you all received these reports last week, we had quite a bit of taxes deposited just because it was end of month with April 30th. And we are ahead on all of our taxes at this point as of today.
Okay.
And so we are projecting that we think that we're going to see in excess of $300,000 in revenue due to higher taxes being collected than we anticipated. We had budgeted a 97% collection rate because we weren't sure what COVID was going to do as of July 1. And so we had a collection rate that was lower than what we normally do or have historically done before. And we anticipate that as of today, we are $23,000 over collection or above what we projected, at least on with the current taxes, and we know that we'll still receive some more through the end of the year.
Okay.
We also are waiting on just a few more grants, the Mashantucket and municipal revenue, as well as other things. We are trying to avoid using any of our fund balance. We had anticipated using $453,000. That's at the very end. We do not believe that we're going to need that.
Beautiful.
We're waiting until, that'll be an end of fiscal year kind of, okay, we're going to dip into that if we need it to balance. So we anticipate about $300,000 coming over on revenues, and we anticipate about $250,000 saved in expenses, $100,000 coming from the school district, and about $150,000 coming from the town.
Very good.
So, yeah.
Okay, John, did you have any questions? No. Okay, Glenn? Okay. So, I'm thinking that, Bill, can we send Brooklyn a letter after the meeting with just a couple notes and see if, if the rest of the commission agrees? My thoughts are that they should be looking for, to move the accounting for the WPCA to the town's accounting system. They should look to provide specific training for their financial assistants in government accounting, put in place a policy for fund balance, and that we would like to see the audit findings resolved as part of the fiscal the next audit.
Yeah, we'll draft something and circulate.
Okay.
Thank you.
Does anybody have anything else they'd want to add to that, or think that we should not put in there?
I would just make, Stephanie, understand that you have been working on the audit findings for some time, and knowing that, if the auditors do of course, they're going to focus on the entire year, and you haven't you have been there for the entire year, but you might not have made all of the progress. But at least if they did their testing, let's say that as of December, you've put all the controls in play. If they had a repeat, Kate, I just wanted to make sure that if the repeat was based on prior, like say she says that as of December, everything has been corrected, and then moving forward, so that we know what the cutoff is in case there is exposure for part of the year.
Okay.
But progress, as long as the auditors show that there is progress, exactly, then I would be fine.
Okay.
Okay.
Perfect.
Thank you.
Anything else from any other commission member?
No, it's
All righty. Then thank you very much, Stephanie.
Thank you.
And
Thank you.
let's move on to Derby. Do we have representatives from Derby present, and do they need to be unmuted?
They might be able to unmute themselves.
Hi, this is David Taylor, Interim Finance Director for City of Derby.
Hi, David. Welcome.
Oh, thank you. I believe we have some others on the line. The mayor, as well as the chief of staff, should be on the line as well. Can you hear me okay?
Yes, we can hear you.
Excuse me, Kate.
Yes.
This is Glenn. Derby is a bond counsel client of ours.
Okay.
I just wanted that to be there.
Thank you. Okay, so David, do you want to give us a little bit of an update before we get into asking questions?
Yeah, sure. I have some comments on the audit report, which, of course, by now it's not there. So we did supply the budget actual results for F20 that we currently have. The audit is nearing completion. We expect it to be finished in May. We have a litany of reasons why it's delayed, including COVID and then the untimely passing of a staff member, among other things. But just to give you an update on it, the following segments are complete. General fund, revenue and expense testing is all finished. The auditor have also completed the Board of Education testing and capital projects. So outstanding, we have Parking Authority, WPCA. We've submitted our OPEB to the actuary and expect that to come back very quickly. And there's some balance sheet work that he needs to complete. All in all, we believe, and speaking with him, will be finished in May.
Okay.
Comments on the audit
my-
report. Go ahead.
Kate?
Go ahead.
To my knowledge, if I recall right, I believe that you had some reconciliations that were delayed. So when you mentioned balance sheet, I want to know if you could please update me on the reconciliations, if they were pending. I know that I think you still had some there.
Yeah, we're up to date on our reconciliations.
Perfect.
Yes. So it's really just in the auditor's hands to do his work.
Okay.
Mm-hmm. So we have, I'm sorry.
Go ahead.
Yeah, just, if you want me to go ahead and speak to the different reports that we've sent, you'll notice in our current year results, we were very close to collecting taxes, but as of today, I can report that we've collected 100% of the grand list. And then once April is posted,
I'm sorry, 100% of the grand list or 100% of the levy?
100% of, I'm sorry, you're right, the levy. Yes, so we're going to hit that budget item. We're planning to add 1.8 million to the fund balance this year, which follows an addition of 1.5 million last year. And we've also established a medical reserve of about 350,000. We're restoring our long-term obligations, such as pension funding. We've talked about that in the past. We're currently at 75%, and we're looking to take that up. The budget is not complete. The tax board is going to meet on May 11th to deliberate and hold a preliminary vote, and then the plan is to have a public hearing and then final voting on the 18th of May, and present the budget to the aldermen in time for tax bills to be created and sent out in June.
Okay. Are you looking at a tax increase?
Well, we're not finished with the budget, but there potentially will be a tax increase. It will be a little possibly confusing if you're just quickly looking at it, but because the mill rate will come down due to revaluation this year.
Okay.
But the taxpayers will pay a little more, we think. Depends on the passing of the budget. So some of the drivers of the change, as you look in there, the current budget, work in process that I sent you shows a decrease from prior year. And the big change there is that alliance grants of $2 million, which used to flow through the city to the Board of Education, are now paid directly to the Board of Education, and that's shown as a budget item in the 21 budget and not in the 22. So that's not going to pass through here.
Okay.
So
that should be, shouldn't that be a net?
Net nothing to the, yeah, absolutely. But it does come out of the revenue and out of the expense. This is offset by increases which are driven by contractual increases. They're all labor related.
Mm-hmm.
We have some final decisions pending capital, a Board of Education request, which was for an increase that the tax board is still looking at, and then whatever our fund balance replenishment plans will be for the next year. Those three are the three major items that we're going to look into over the next 2 weeks. And in our budget, there is no hedge on COVID monies, which have not been communicated directly to the city. We've heard a lot of noise from Hartford, but we've chosen not to hedge on that at this time. On the corrective action plan, we reported last time that we had implemented changes, and we are very deep into the execution phase of correcting all of the findings. We're continuing to enhance our segregation of duties by strategically adding staff, changing processes, and just moving onward from just the basic internal controls to improvements there. And we are committed to timely reconciliation of the BOE, which we're going to get into our next round of that coming up, and maintaining and improving our use of encumbrances, converting all funds to double entry accounting. That was mostly a BOE issue. I believe we are operating efficiently. We're implementing the corrective actions, as in summary. We're funding our obligations, and we're implementing organizational changes to improve fiscal condition. And I think a lot of the process improvements we've put in place over, just the time I've been here, have followed up very nicely with what Mr. McLiberty started, and have continued to improve not only our controls, but the work-life balance of our employees. So, thank
Okay.
you.
So a couple questions.
Mhm.
What is your collection rate assumption?
For next year, we're assuming 98%, I believe. Yes, 98%.
Okay. And what was it this year?
The same.
Okay. You said you're going through reval and you expect the mill rate to drop, but you're assuming an increase in your supplemental motor vehicle tax. Why?
Yeah, we think. Oh, you're looking at the details there.
I'm looking at your budget estimates.
Yeah, the detail supports that. There's actually, because of the mill rate, I'm sorry. I don't have the details on that, but I'll have to get back to you. Right in front of me.
Yeah, I'm just looking at your actual for the current year.
Yeah.
If the mill rate is going down, I wouldn't expect your supplemental motor vehicle to go up. You had an item there, Wpca Bonds. Can you tell me what that is? It's $1.5 million.
I believe that's a pass through to WPCA.
It's a revenue item.
Mm-hmm.
Are they reimbursing the general fund for debt service?
Yes.
Okay. And you said you established a $350,000 medical reserve. Are you self-funded?
Yes, we are.
Okay, so I'm just curious why you're running looks like you're running the medical insurance premium shares through the general fund. Rather,
from obviously premium share, and then it's grossed up so far as the expense on the expense side.
Okay, so you're self-funded?
Yes, but the employees kick in.
Right. But you're not maintaining a separate fund for the medical insurance?
Not yet. We need to push that out of.
Okay. Okay.
That is in our plans. Right?
Okay. All right. Let me go with my. All right, Mike, do you have any questions?
I'm good, Kate.
Becky?
No, I don't, Kate.
Diane?
I do. I mean, just to follow up on what you said about the health insurance running through the general fund, and they don't have, I think I heard him, he said he did not have a separate fund set up for the health insurance.
That's what I heard.
So there would be no health insurance reserve set up for claims. So I think, maybe one of the recommendations we should make is that be set up as a separate fund, and they look at a policy or some way to start funding a reserve, in the event their claims, exceed what they have budgeted and can plan for it.
Yeah.
Do they have stop loss? Do you have stop loss on any of your policies?
Yes, we do. And we are in the process of doing that. It's just not in these numbers. I didn't want to mislead you.
Okay. All right. Anything else, Diane?
I think that was it.
Okay.
Thank you.
Kim?
Can I hold and go last? Sorry.
Absolutely. Glenn,
No.
John?
No, I don't have any further questions. It just it seems like you've made a lot of comments, but every time we bring this up, I keep wondering, how did you make it into the 21st century on single entry accounting? I mean, I just don't know how you managed before. So that you're putting things together, I think, is very commendable. But
Yeah, I have the same opinion as you, sir. After decades in corporate accounting.
When did you start, Dave?
I arrived here in January.
Okay, Kim, I think you're up.
Okay. I'm quickly looking at your audit findings and piggybacking off of John on the board member. And while I look at the findings and it says a lot of things are in progress, you mentioned that you implemented the city or board of ed double entry accounting, but you're finding your prior year findings are still reflecting in progress as of the first quarter of 2021. That says implemented. So when I say that, does that mean it's done? So if it was done and it still says first quarter, are you on target or are you off target?
Yeah, they just started that last month, and we are on target.
Okay.
It's our goal that by the end of this year. Now, obviously, I anticipate this will be on the audit findings from the F20 audit, but we are anticipating it will not be on the findings for the 21 audit.
That's what I want to hear. Okay, perfect.
Yep.
What about item number 2? When it says I'm looking at all of your items that are saying in progress. And so I'm making sure that because you had extensive findings. And so,
Right.
I'm hoping that you'll be able to wipe this down to at least 50%. And you're not going to have 18 audit findings. This is, it's glaring, very glaring.
I agree.
And it's kind of more than glaring. It kind of lets you know that your financial infrastructure is very weak. So I'm hoping that you can tell me that most of these in your evaluation as the new person, that some of these have been closed or not closed. What about number 2, please?
Yes, we're doing this. It's in place. I believe that it's effective, what we are doing with proper sign-offs. And we didn't want to put complete because we kind of would like to see that disappear from the audit findings. And it was implemented on the date that we said on the column. And, it's in progress because we're doing it. That's the way we intended those words to be meant. I understand from your perspective why you're asking these questions. It doesn't quite fit the done stamp.
Yeah, in progress says to me that you're not done.
Correct.
Well, we are. We are doing these things.
Okay, so when you then give me an update, if you've implemented it, I understand it might not be in place for the whole year, but if you implemented it and let's say it's July 1 or it's 12/31, then I would like you to say that it's closed or it's been executed and that's the date. And that going forward that I'm not going to see that going forward.
That's a great add. We'll definitely.
So if the auditor dings you and they're dinging you for an October reconciliation, I get that. But I don't want to see that they're going to ding you for a January reconciliation. With me?
Absolutely.
Perfect. Thank you. So you're going to add the date that it was complete and call it executed. And then this way, everybody knows the hard stop.
Yeah, I like it.
Okay. Yeah. And then if the auditor does a look back, that should then be taken into consideration for you by all of us.
Yeah. We were waiting for the auditor to close it, but maybe we'll keep whether the auditors closed it or not column and a column of we've done this, executed, we're doing it. We fully expect it to come off the next audit report. That's a great add.
Yeah, I would like to see that for our next meeting, and this way it's your evaluation of what you've picked up from your predecessor.
Great.
Okay.
I like it.
Okay, perfect. So let's go down. I'm sorry, number 5. You say in process. Is it done? You said it in an overview that you thought it was done, but I'm not sure if it is.
Sorry, I'm reading it.
Well, you should know, did they have it done at June 30th of 20?
Yes.
Okay.
So maybe I stop questioning you on each one of these items and
I think
have
we
you-
need an update on this.
Exactly.
Because I think, David, what we're looking at, because it says in process, but you say you're doing it. So, going back to number 2, bank recs were not formally prepared or signed off for the general fund checking accounts. If they are now being formally prepared and signed off on, it shouldn't say it's in status anymore. It should say, completed.
Yeah, would it be okay if I waited and at the end of the audit and we can get the findings and make sure we're married together with what the auditor comes up
No.
with? Can you give us a
No.
month or?
No, I think you should be able to go down this list and tell us, the Board of Ed at June 30th, 2020, did the Board of Ed cut off their accounts payable appropriately? Are you fully utilizing the encumbrance system? If you're not, where are we still lagging? You should be able to go down all of this.
David, don't feel hesitant on this, okay? You're inheriting this, and we know that this goes back all the way back to 19. We understand you're not going to be able to close all of these in 1 year. That's crystal clear, crystal clear. And some of these will be a repeat in 2020. But then when it says fourth quarter, it was implemented, I want you to determine, yes, it was, or no, it was not. And then it's still in progress because I'm going to see it again in 21. Or so cut it up to the items that are still open versus the ones that should be closed.
Okay.
Don't feel uncomfortable. Put a hard stop on it.
Oh yeah, I think it's a great add to this schedule, and I appreciate the comments.
Okay.
Yeah, and just so I'm clear, just to be clear, this goes back to 2010.
Understand.
Yeah, and that shocking when I first saw it. But anyway, sorry for the extra comments. But
it's okay.
Yeah,
that's why you're here.
I want to get your timing on that, though. I've heard next meeting. Is that what you're looking for, or are you looking for something sooner?
Well, I'm thinking similar to what we just discussed with Brooklyn. We're going to be sending an updated letter with some recommendations, and to me, this ought to be pretty simple. You should be able to go back to your office today and say, numbers 1, 2, and 3 are done. The auditors haven't blessed it yet, but we feel in Derby that it's done. So you should be able to turn that around, and then we would want it updated again at the next meeting.
Will do.
And maybe an expected complete date for those things that you haven't gotten to.
Thanks,
Great
John.
idea.
Yeah, that's what I'll do. I'll make a column. I'll put done, or I'll put the date of expected completion.
Okay. Kim, what else have you got?
That was
That was it?
When are we going to get the audit?
We're expecting it in May.
May. So let me ask you this. We're approaching the end of another fiscal year. How do you feel you are situated for the next audit?
Oh, very good. We're in good shape.
Okay.
I mean, it's we're not down. Well, we're not down staff.
Yep.
The pandemic is not keeping us out of the office, and that's Keith made a lot of improvements, and I picked up from there.
Okay. So if all goes well, you should be able to do the 21 audit, file that on time.
Your lips to God's ears. Yeah.
Okay. Okay. So anything else from any other commission members?
Yeah, I do. Sorry, Kate.
Go ahead.
Go ahead. What are you projecting for fiscal year 2021? I know that you mentioned earlier, I think, no, maybe I don't have that right. What are you expecting for fiscal year 2021 to be your surplus? I wanted to make sure I have the years accurate on, because when you said fiscal year 20, your fund balance was 1.8, but that was 20, I think, unless I misunderstood. Is fiscal year 2021, what is your projection?
We're projecting to add 1.8 million to the fund balance.
1.8 in 2021.
Correct.
Okay.
And so similar to what we asked Brooklyn, do you have a policy on your fund balance as to what level you would like it to be at?
Yeah, the policy's 10 to 15%.
Okay.
And have, you know, in our plan that we presented a couple years back, we are, you know, we're working that plan, and we're not quite there, but we're moving towards it.
Okay. Let me ask you this: if how far off are you?
We're currently at 7%. You know, as we know, as you can tell by the additions we've made, we were a bit under there.
So, do you feel that there's a will among your administrative officials, elected officials, to continue that move to get to the 10%?
Yeah, absolutely. And I left that as an open item. In a recent meeting, we had some money that was not expected come in, and the Board of Tax made us very proud, and that they said, let's put that towards fund balance, and that's why we're going to have 1.8 million this year instead of 1.5.
That's terrific.
Yeah, it was really, it really made me think that everybody's getting through.
Okay, and then one just editorial comment.
Mm-hmm.
What system did you use to prepare these reports? The revenue summary and the expenditure summaries?
Yeah, it's our GEMS, the revenue summaries, and I know some of the headings are a bit confusing. I've been through this with some other folks as well.
I was going to tell you one of them spelled wrong.
Yeah, appropriations. Yeah, was it appropriations? I know that was spelled wrong for a long time.
I before E except after C is, or one sounded like A is in neighbor and way. Received.
Yeah, well.
Hey, Dave, you had mentioned that you're coming off of reval and you're anticipating that the mill rate's going to go down. Can you speak, I guess, or correlate to the will of that Board of Tax as far as setting the mill rate for next year? You know, acknowledging or following in line with the idea of protecting, if not adding to fund balance going forward?
Yeah, absolutely. They are committed to adding to the fund balance, and that will be reflected in the new mill rate. That, like I said, that's one of the items that, you know, to finish in the budget deliberations. There's just a placeholder number there in the current budget, which was, you know, woefully inadequate. But we'll be talking that in the next meeting.
So that reminds me of the question I had. Your reval. What are you anticipating in terms of the public? You know, do you think you're going to be seeing a lot of appeals?
Yes, we did. There were quite a bit of them, and you know, we've adjusted our projections, you know, for the actions of the appeals board. That's all done. And
what about lawsuits?
It's interesting. I've seen only one so far.
Okay.
And it's not that much money, but it's a business, as you would expect. The nice thing for them, but a lot of the commercial properties actually had a reduction, whereas the homeowners had an increase, which is gonna, in my opinion, will probably reduce the number of lawsuits we see.
Okay. All right. So for the commission, I'm looking at a follow-up letter with this suggestion that the medical insurance, they need to establish a separate fund for it with a funding policy. And they need to provide us an update of the audit comments showing the dates that the items were resolved and include the expected completion date for the unresolved ones. Is there anything else that you'd like to see in such a letter?
Yeah, Kate, actually, I've been pondering the health insurance question, and I agree with Diane that if it's self-insured, it would be important to have a reserve fund, and the size of that reserve fund be developed with some expert advice. But I'm also wondering if there are any other self-insured risks that need similar treatment, workers' comp or liability-related risks that Derby is self-insuring.
David, can you answer that?
Yeah, I believe our budget is sufficient for what we've had. In fact, we do have stop losses. I can't remember if it's on the workers' comp, but we have had a good experience there, and we've been able to fund it within the budget every year. But
So your
again,
workers' comp is self-insured as well?
Yes.
Okay. Well, it's a smaller number, obviously, than the health insurance, but it's not nothing. And if you're self-insuring, there is that risk of having a large claim. And so having a reserve fund, making sure that you are properly measuring your incurred but not reported liability, and having, a thoughtful expert analysis of that to make sure that you have sufficient protection. I think those are all important steps.
But yeah, we do that, and we have stop loss, and we fund the claims to hit the stop loss. We also, we use an actuary to come up with, what it should be. But it's not clear in our statements that there's a reserved fund, and that's, I'm going to take that to heart, and we'll see that in your letter.
Okay. All right, anything else?
Year one of the reserve, so yeah, it's new.
All right. If there's nothing else from the commission, then thank you very much. And you're seeing progress, and I know it's a long, painful process, but I think you're making progress, and that's what we want to see.
Well, thank you for that comment. I appreciate it, and we will continue to move forward.
All right. So now we also have, next on the agenda, we have Hamden.
Yeah.
All right. And who we got here from Hamden?
Good morning. This is Scott Jackson, Finance Director. Mayor Lang is on the line as well as Rick Galar is Deputy Finance Director.
Okay, so Scott, do you want to give us an update on where you are?
I think Mayor was gonna
do that.
Open the discussion.
Sure.
Mayor, are you here? Star 6 to unmute.
I forgot the star 6. My fault. Good morning, everyone.
Good morning.
Hi, Mayor.
Hope everyone is well.
And Scott Jackson.
Yep, I wanted to make sure that that we acknowledged Adam Sendroff. He's my chief of staff, is on the line as well, along with our finance team. So the town has had very good progress over the last 2 months since our last meeting. Fiscal 21 is in a stronger position than where we were last time as well, and getting very close to closing with a surplus. We'll continue to work on several larger cost-cutting measures collectively, which are to the tune of millions of dollars, definitely 7-digit efforts in the areas of medical insurance and some concession issues that we could talk about some more. Wanted to let you know that the completed pension audit was presented to our Hamden Employees Retirement Board at its last meeting, and also that the pension fund itself reached over $190 million for the first time. And I submitted my mayor's recommended budget to the Legislative Council around March 17th, and the council's been working on that. It's by far the tightest budget proposal that I have ever submitted on the expense and the revenue side, and there seems to be a commitment certainly from the council body to budget conservatively so that we can continue to strengthen the finances globally. So I'll turn over to Director Jackson, Deputy Director Galarza for the financial updates and numbers, and then we'll all be ready for any questions you may have.
Thank you, Mayor. So as we sit here on May 5th, our projections are as of March 31st, 2021. Obviously, vagaries in pandemic year impact both the expense and revenue side. We are looking at right now, our projections indicate a negative $8.8 million in revenue. Our expenditures are projected at negative $8.2 million, leaving a $600,000 deficit. However, there is not $1 of federal aid, Corona aid in this, which we expect to get at least $11.4 million. So we are anticipating ending the year with a fairly sizable surplus. Corona dollars have not been budgeted into the mayor's proposed budget for next year either. And so the biggest bogey left in our budget for FY21 was a $6 million line for Corona relief, which we expect to exceed and surpass in a fairly dramatic way.
Is that it?
That's the big overview.
Okay. How are your property tax collections? Look like you're behind. How do you expect you'll end the year on that?
The current collections are actually ahead.
Okay.
We were at 98.73 as of a couple of days ago.
And what did you project in the budget?
98.5.
Okay.
So we are not seeing on residential or commercial. The automobiles are a little bit behind, but we make our taxes on the residential properties.
Looks like you've got a significant shortfall in your building permit revenue. Was there something that you anticipated would happen that didn't?
There were very few large construction projects, but we are also behind on our inspections because I guess when you spend a year inside your house, you see things that you didn't see. So we have a lot of small projects, but we did not see the big projects that are typically part of that bucket.
Okay.
And to add a little stress, there were 2 retirements in the department too at the beginning of this fiscal year, which 2 of which have been filled, and 1 of which is being advertised.
Okay. Looks like your recreation is also pretty far off. I'm assuming that's COVID related?
Yes, we had no summer camps.
Okay. Okay. All right. Let me open up to board members. John, do you have anything you want to ask?
Give me a couple of seconds.
Sure. Let's go to Mike.
Also takes me a little time to unmute.
Unmute yourself. Okay, go ahead.
I just have one follow-up question. Scott, you referenced the 11.4 million in coronavirus relief money that I think you indicated you were looking to bring in as revenue in this fiscal year 2021. Do you see any issues with being able to bring all of those funds into the general fund?
Well, and this is, where I think every community struggles a little bit because we have no guidelines from Treasury. But one thing that I think that we may have done a little bit differently is, we just intend to book it and bank it. We haven't already spent the money. Some places are anticipating spending the money in various pockets and budgeting it even into next fiscal year. We have no plans to touch that money until we understand exactly from Treasury how it can be spent.
So you're thinking of bringing the ARPA money to your general fund?
Right, until at least we understand how it can be spent.
What happens if they say you can't use it, for things you've already done?
Well, with the 4-point guidelines that have been issued, where we have a high degree of confidence in that, but we're not moving beyond those 4 points that were issued when the legislation was signed.
Scott, Kate, just for a point of clarification, or Scott, how did Hamden handle the stimulus money that came from the first couple rounds of the money provided through the state?
That actually preceded me. Mr. Galarza, can you respond to that?
Yeah, the first round, we received around $719,000, and we used that to offset salaries related to the COVID expense. We were informed that salaries were able to be charged, and we used those funds to offset salary. And we also had around $100,000 to $200,000 in actual PP&E expenses that we created a fund, COVID expense fund, and we moved the expenses in there, and we worked with the auditors to book the income that came into the state, because we had expenditures in the prior fiscal year, and the check came in the fall to help offset that. So we highlighted that in our audit. So we pretty much used it for public safety expenses and actual PP&E, whether it was masks. We brought some spray units. We brought, the plastic shield covering and gloves for the town. And that's been reported back to the state on our expenses.
Okay. All right. So I guess it just points out with more clarity. So the 11.4 million, to Kate's point, is anticipated use of the ARPA money.
Well, anticipated collection of the ARPA money.
Right.
Use to be determined.
Okay.
Okay, Mike, you good?
Yeah, I think just, as I'm sure you're going to do, as we're going to do as well, I think anything we bring into the general fund, we'll ultimately have to, I assume, identify, that the recovery of those funds is in line with the guidance that's yet to really come out. But, hopefully, this will work out where by the time, before you close the books on fiscal year 2021, there's some clarity and you can follow in line with what those guidelines are for using that money to bring it back into the general fund, with one of the areas being, the revenue losses that have been sustained.
Mm-hmm.
Yes, and we certainly hope that is the case. The legislation indicated that the checks should be issued within 60 days of signing, which was March 11th, so May 11th. So we will see in 7 days if we have the receipts in hand.
Okay, I'm good, Kate. Thank you. Thank you, Scott.
Okay. John, get yourself unmuted and all.
Yeah. Can I just go back to sort of basics of where we were at the beginning of this? Where's your pension stand?
Our pension is 40% funded at this point. $190 million. We did issue pension obligation bonds several years ago that enhanced the corpus and have allowed us to essentially move from really a bond base. When you only have 2 months worth of pension funds available to you, you have to go to the bonds, and we've moved more into the equity space, and we have exceeded. And that was actually a question at the last meeting. We have exceeded the 7% assumption.
Okay, well, I'm not a finance guy, but I don't think you can expect to depend on that in the equity market for very much longer. Matter of fact, I'd expect you might even see some losses.
Yeah, it has been a run, and the volatility is it's extraordinary. We did have one of our fund managers who failed to meet the benchmark for half a year or so, and so at the last meeting we did terminate our agreement with that fund manager. It was a small cap manager, and we are moving to another manager who has historically beaten the indexes.
Okay. And if you were to roll forward, what would your expectation of your fund balance be at the end of the year? Exclude the COVID money.
Excluding the COVID money, we're projecting a $600,000 deficit.
Okay.
I mean, that's expenditures over revenue.
Well, I was thinking about the balance sheet.
Yeah, but that also does not include, we still have 2 months of tax collection.
No, I understand, but yeah, if your best guess in your projection, where would your balance sheet stand?
Mr. Galarza, you want to take that one?
Yeah, so as far as our projection for June 30th, 21, right now, so alongside COVID, we also have a plan B, which we call our deficit mitigation plan, where we went out and we restructured our debt, and that's supposed to yield $17 million over a 3-year period. So right now, in the forecast that we provided the state, we have our debt service coming in under $6.2 million. So those funds would have to be utilized if COVID has restrictions that we can't bring into the general fund. So to answer your question specifically, if we use that to offset the $6 million that we had in the budget for COVID, our balance we would break even, and our plan is to break even. Our taxes are a little bit ahead in April compared to the actuals that you have. So breaking even would remain on our balance sheet. We would still have a negative 2.3 in our undesignated fund balance. So as promised in January, what the mayor did was in our debt service, in alignment with our deficit mitigation plan, we budgeted our debt service at $22 million, and our debt service payment for the ensuing fiscal year for 21-22 is $17.5. So at the end of fiscal year 21-22, that a residual of $4 million would drop as a mechanism when we close out the year, would drop to our fund balance. And out of the $4 million, which was provided to you on the third sheet, the 4.3 would be offset by the negative fund balance of 2.3, leaving our fund balance favorable with $2 million. If the COVID funds, are restricted in the sense that they can't be utilized through the general fund. And what that would do is that would reduce our original plan of generating $17 million over 3 years. And in the spring of calendar year 22, we have one more restructuring that we have to bring forth to the Legislative Council. They approved the first phase This week, they approved the second prong, which was to do a debt refinancing for 1.2. So the last refinancing that's on the table would yield the town a savings between $10 to $12 million over the last year. So if you take that plus the $2 million that we would save next year, we should have a fund balance of around $14 million over the next 2 years. If there's restrictions on the COVID funds, and that would put our fund balance with a projection of an increase in the ensuing fiscal year of around 5 to 6% over a 3-year term. So we would cover the loss of 1920, we would balance out fiscal year 2021, and we would address the loss of 1920 in fiscal year 21-22.
And
Which of these refundings have actually taken place? It sounds
Well,
like
we
there's a lot
had-
of ifs.
No, there's not a lot of ifs. There's the first refunding of $9 million occurred in July 22nd. That was passed. We're in the first year of that. We're projected to save the $6.2 million this year. The second prong, which was passed this week, was to refinance up to $18 million in bonds, which would yield for fiscal year 22-23 a net savings of 1.2. That was approved. We were just waiting to meet with the rating agencies probably toward the end of the month, because we have this COVID still up in this COVID, the American Recovery Act still pending, and that will probably put us in a more favorable position at year end. So that conversation needs to take place. So,
Okay.
luckily enough,
Why are you, I'm not sure I'm seeing the tie between the two. Are you not going to refinance if you can use the COVID money for the general fund?
Absolutely not. We're going to run both programs. So we have a plan B in place because we needed to cover our deficit, our losses for 1920. We needed to come up with a plan to cover those losses independent of the COVID funding, because we didn't know about timing and how we would be able to apply. So we put another plan in place, which we call deficit mitigation, fund balance growth. So independent of COVID, because we're being conservative and we're operating as if those funds are not going to come in, this is sort of where we're at today. So the 3-prong, we already had 66% approved, and the last phase that can yield the town between $10 to $12 million in savings would be next spring.
Okay, so you've had one refinancing, which is produced savings in fiscal 21 of 6.2 million.
Yeah, and that's
And
indicated
22.
under debt service on page 2. Under debt service, you'll see a savings of $6,293,202.
Yep.
So that's where that savings comes from.
Okay, so then you have gotten approval to do another refinancing that you estimate will save you 1.2 million in fiscal 22. But that has not taken.
Yes.
You have not issued those bonds.
No, we're waiting to have the well, we needed the approval before we can discuss putting an OS together and going in front of the rating agencies. But we're also waiting to hear back from the federal government as for so that we can better understand to be in compliance with the American Recovery Funds. So
right.
if that comes in, that would just show our fund balance in an even more favorable position is what I'm trying to say.
Okay, so let me go back to the ARPA money. What are you seeing that makes you think you might be able to use it for the general fund? Not, aside from revenue loss replacement.
Revenue loss replacement will be the primary area. We've been in close contact with.
I'm sorry, I need you to speak up a little bit.
Can you hear me now?
Yeah.
The revenue loss portion of it would be a significant portion.
How much?
And there's also going to be additional expenses. Since we don't have it in hand, we don't know yet. The final rule.
Well, what are you projecting as your revenue losses related to COVID?
Most of the programmatic areas, There are towns and cities across the country that are looking at grand list reductions as one of their COVID lost revenues. It really stretches all over the map. So we want to make sure that we can document it properly once the Treasury language comes forward.
Okay.
If I can, it seems like you've done a certain amount of modeling to the future on various scenarios. And frankly, you had me lost a little bit about plan A, plan B, plan C after a while. But assuming that you've got a target fund balance that you want to reach and a plan to do that, I think what would be useful if, the next time you had some of that written down and shown what your assumptions and models are. And I'm only a little bit concerned, being from the Hartford area. I remember about 5-7 years ago, they did a refinancing that looked great for 2 years. And then the bills hit. So just want to make sure that these aren't short-term.
No, I just want to say, this is Mayor Lang. I appreciate that feedback, and that was something that was, very much in the front of our minds when we were going through this process. So in the restructure, we made sure there weren't any years that were balloon years. And while it might look, if you look just at the restructure alone, that it might be a balloon year, we've funded the actual debt service line on a ramp up increase, similar to how we work the pension year after year. So the funding is not at the lowest amount possible. It just continues to bump up as the dollars continue to grow. So the most that we have from year to year that would be different is about $2.5 million in one of the years, which for us is about 2/3 of a mil.
Got it. Just accumulated problems never get solved over 1 year. So pushing that
Understood.
out
Absolutely.
and looking at it over a number of years, and it sounds like you've done some of that, and just like to see it.
I could not agree more. Just as an aside, in the fiscal year 2001, we paid 0% of the ARC. In fiscal year 21, we paid 100% of the ARC. You don't get their, big pieces at the time. You have to work at it.
How sensitive is your estimates on that refinancing that you have approved but not yet done? How sensitive is that? Are we on the cusp, where you're only looking at about 2.5% savings? Are your savings more significant? What will the time that it takes you to get out to market, what were the implications for that?
Since there doesn't seem to be a significant appetite by the Fed to move rates, we don't feel great, sort of daily or weekly sensitivity pressure on that. Our proposal provides us until January to actually issue the debt.
Okay.
So we want to move on it because this is real money left on the table. We are projecting 170 basis point reduction in interest, which is significant. So principal stays the same, interest just drops by 1.7%. And so we do want to capture these savings. We do want to lock them in. You never know what kind of exogenous event may occur to move the interest rate bubble. But we do think that we'll be in a better position to capture the lowest possible interest rate once we have some greater clarity on the ARP money.
Okay.
Go ahead.
Mr. Jackson, can you tell me, this is Kim, when you said that the principal is going to stay the same, are you extending the terms or are the terms staying the same?
No extension of maturities. It's a straight, clean refi, no restructure.
Thank you.
Okay. Kim, did you have anything else, or do you want me to come back to you?
I do, but I guess I don't want to. So one thing I did want to mention, Mayor, in the past, you came forward and you had your beautiful plan that you were presenting to us. And I know at one of the meetings we said too much presentation, and now I think we have a little bit too less presentation. So Mayor, try to meet us in the middle, please, because I think some of the things that you tried to bring us back to on your plan with the 2-year, today it turned into words versus having that plan in front of us. Sorry, we can't remember from the prior times. So I think that reiterating that history as well as what that is going forward, it'll make it a lot easier if it was already included in the package. Then this way, we're just going to quickly bring us up to date, and then we can get focused on where you're going forward. So it's a balance. I know that you're new to this and with this commission, but I think that you have done a lot of this work already because I know that we saw it. And so I guess I would ask that we bring some of that back, but maybe not all of it.
Agreed.
Not a problem whatsoever.
Thank you.
Becky, did you have anything?
No, I didn't. Thank you, Kate.
Diane?
So the only comment that I have is I just in knowing how the rescue plan how we think it is going to work, and we're still waiting for the guidelines to come out. I think if I'm hearing everything correctly, the plan is to use the 11 million that Hampden is getting to offset revenue reductions and loss over the last year or so. Is that a correct statement? And any other expenses that you might have that are related to COVID?
So those
That is
dollars,
correct.
as you know, are in two tranches.
The 4 corners of the guidelines.
Okay. I'm just concerned. Yeah, I mean, I know a lot of discussions and with other finance directors. Sometimes we're looking at using some of that for like one-time costs and to try to do some economic recovery. Don't know if you might want to keep that out of the general fund to try to look at that as planning for the future instead of trying to replenish the general fund. But that's just a comment. That's not to be included in any letter, but just a comment that I had.
Oh, no. In the letter. Because what I'm thinking is I think we need a little bit more clarity. I'd like to see a letter going out. I'd like to see the refinancing plan. Showing the current and projected debt service. I'd also like to see, it's hard to visualize what you want to do here with the ARPA money, and what are your plans if you cannot put the ARPA into the general fund? If you can't use it in that way, what are your plans for resolving your fund balance issues, prior year's losses? What are your plans for that if you can't do it?
What we submitted on the third sheet is what the plan would be without any relief funding. So the whole presentation that you have in front of you does not include and does not project any relief funds coming into the town. That would only be above and beyond. So we provided our revenue forecast for this year with a projection. We provided the expenditures to date with a projection. And the third sheet is how we would cover the losses from 1920 through our debt service for the ensuing fiscal year that is in the mayor's recommended budget that we're currently having deliberations on.
Your third sheet, if that's what it's intended to do, it needs a little bit more fleshing out.
Is it the one that says mayor's recommended budget?
Yeah.
That's the third sheet.
Can we go over that briefly just so you can understand the
How about you resubmit it to us with more detail?
Okay. Yeah.
It's going to be just hard to sit here, listening and seeing it. I think we need you to flesh that out.
Okay.
Not a problem.
Do we have any audit comments that were at management letter from June 30th? Anything outstanding on that?
We do. We're looking for an action plan. Let me see if included. No.
I don't think we've received a management letter, which we thought
No.
they.
No.
Okay, so do you have a management letter for your June 30, 2020 audit? Anybody?
Yeah, I thought that was forwarded to the state, right, through our auditor.
No. It hasn't been uploaded to our portal yet.
Okay, I'll follow up with the auditor, and we'll do that. Not a problem.
Okay.
I will do the
Can I
same.
just add one thing for clarity?
Yes.
That on the America Rescue Plan dollars. So as you know, it's coming in 2 tranches. The entitlement communities, as a CDBG community, will receive our checks directly, but only half of it is going to be coming in that first tranche. That first half is what we're planning on trying to work toward majority reinvestment into lost revenues into general fund. Future monies would be used for different investments and trying to take things off of, say, the capital load that we could use instead and really put this money to good use. The other thing that I think is important for us to remember is that there's a very large amount of money, 164 million, I believe it is, for the Greater New Haven County. And that's going to be distributed per capita, but we don't have our exact number, but it looks like it would be somewhere in the millions, maybe 3 to 5 additional. And those are not budgeted for whatsoever as well.
Okay.
But wait, you did budget one thing. Sorry, Kate, to interrupt. I think you budgeted for distress. Do I have that right, Rick?
You're not.
Budgeted.
I'm not getting distressed.
Did I say that?
No,
Hold
we're
on.
not, no. Out of the $100 million, I don't think the state has identified Hamden for any distress funding in the ensuing fiscal year.
Sorry, my mistake. Too many
That's okay.
too many towns today.
It's fine. It's fine. I wish.
It hasn't been approved.
Okay.
Okay, so for the commission, we're going to ask to see the refinancing plan, better detail on plans for the ARPA money. If the ARPA money cannot go to the general fund, how they're going to address that. And we need to get the management letter and a corrective action plan. Is there anything I'm missing there? All right.
Kate, if I could just
yes,
ask with regards to that refinancing plan, I guess my only thought would be as well is, will that also, if they could work in some idea with regards to future capital spending? A lot of times on these restructurings and refundings, you kind of, it always focuses on the first couple of years and smoothing the debt service out. But projects still need to happen in town, maintenance and upkeep and such. So I'd be curious with regards to, does this, allow them to still do capital projects, and will the debt service be able to, accept the increases from those?
Yes,
Right.
we have
Yeah,
a
we can
firm charter provision regarding debt service that capital projects cannot exceed 10% of the expenditure budget in any year. So it assumes no growth in spending, and so it creates a really hard cap, and our debt plans therefore always have to provide what in any given year that differential may be.
Scott, do you do a multi-year capital plan?
We haven't done a capital issuance in a couple of years. I'm working on it now.
No, I mean a plan that, not about fund balance, just or financing, but showing the plans for capital projects.
Nope, yes, I am working on that. Got some notes from the mayor a day or so ago. So we will be presenting a 5-year or a 1 + 5 year capital plan.
Okay.
And do you do any forecasting beyond 5 years? You've got some big numbers between debt service, pension payments, medical insurance, that are going to be rising over a much longer period than 5 years and kind of need to be coordinated. So are you looking longer term at how those numbers are likely to play out?
Yes, we are in a different position than we have been historically, because historically we were trying to catch up.
Mm-hmm.
But we have essentially, we've caught up on pension. We are going to have a significant surplus in medical self-insurance this year. We've made significant strides in workers' comp. So some of these large dollar figures where we're always trying to reach the next level have actually been taken care of, and so we can provide a much more sort of measured approach to year-over-year increases than at the capacity to do.
So Becky, you're making me think we should add to our letter recommendations that the city look at not just the 5-year capital plan, but a multi-year forecast in general.
Mm-hmm.
But then I'm going to go, you just said you were caught up on your pension. I thought you said you were 40% funded. Please define what you mean by caught up then.
In terms of payment of the ARP to the ADEC.
In terms of payment of the ADEC?
Yeah.
Okay.
Right, but looking longer term, the ADEC doesn't stay still. It goes up over time by design, and my suspicion is that you're measuring it right now based on an interest rate assumption that's probably too high. And so better understanding where that's going to go long term, then similarly medical insurance, both for your employees and retirees, so long as medical costs are increasing at a faster clip than your revenues, that's going to put, obviously pressure on your budget going forward. And understanding the dynamics of those and the longer term picture, I think will be really important for balancing out, the shorter term budget based on a longer term look down the road.
Certainly, and our pension plan is closed, and so our actuaries sort of peg it at $200,000 to $400,000 a year increase until about 2045, and then it drops off a cliff. The medical, we utilize professional services to provide us a glimpse into what they think is going to happen in terms of medical inflation. We're not really growing the workforce size. We've actually, the demographics of the workforce have changed fairly significantly over the last 5 years to younger actives and older inactives, right? So we do have those numbers. We do have the capacity to project them. Obviously, as you know, the further you are from today, the more variance in those numbers.
Sure.
We also include a 3-year forecast in our adopted budget book. I mean, we'll be happy to expand it further if you want to look out further years. But we do, once the adopted budget gets adopted, we do forecast the next 3 fiscal years in our adopted budget.
That would be great for us to get a copy of that.
Absolutely, my pleasure.
Okay.
And we'll work toward a better blend of narrative and number.
Yeah. Thank you. All right. Do any commissioners have anything else? Okay.
If I could add one other thing from our last conversation, there was a question about an experience study for the pension fund. I did discuss it with the pension board. They agreed to do it. Unfortunately, I wasn't able to make the last meeting to make that an action. But we do have sort of the approval of the pension board, and we will be moving forward with an experience study.
Excellent. Beautiful.
Very good.
Okay, thank you very much.
Thank you for your time.
Thank you very much. Appreciate it.
We did receive updates from Ellington and Plymouth. Does anybody have any desire to go over those?
I'm good.
Okay. Bill, where do we stand with June 30 audits? Who, other than the ones we already know about?
There should be a list in the packet. I believe there's
Sorry, I closed my packet before.
14. Well, I'll just list the towns: Andover, Ansonia, Bethany, Branford, Danbury, Derby, as we know, East Lyme, Haddam, Naugatuck, New Haven, London, Orange, and Wyndham.
Do we know, I mean, some of these,
That seems awfully high. How's that to compare historically?
I think it's a little bit higher than the norm. There are the list will provide you with the history, but there are some that are not normally.
what's the deal with Andover?
They're typically they're the ones
They
the worst
have history.
offenders.
Yeah.
The last 3 years before it's 122 days, 179 days,
And East Lyme
187
too.
days.
Geez, we got,
Yeah.
yeah. Wyndham. Wow. Are any of these just like COVID issues or?
Well, a lot of these are repeat offenders, but
Yeah.
I do know of one that I can't go into details, but
Yep,
it's
that's fine.
right.
Are there any of these that are late that we're concerned about? Like people who are not before us now?
I would love to find a way to get some of these that are repeat offenders, which is 3 or more months past the December 31st date. It's becoming where it's just the norm for them. I don't know how we resolve.
Yeah, Kay, can we take a look at these that are, greater than 100 days?
On a regular basis too.
Exactly.
Yeah, like, I mean, Andover, what the heck?
Right.
And Wyndham,
Right.
they did all right with their 2018. They were only 2 months late, but regularly 6 months late. What can we do? Like, can we send a standard, a form letter to each of these asking them to tell us what the deal is? And what their plan is to get the next one in on time? Because, these ones who haven't submitted it now, you're about to end the year.
Correct. And they're a year behind.
Yeah.
They're a
I
year
think that's
behind.
a great idea, Kate, that a letter should go out to them.
We can draft a letter on
Yep.
behalf of the commission to these towns for anyone that's been typically late.
Yeah, like I'm not, well, when you say typically late, I mean, 30 days, I'm okay. I don't think that's so horrible because things can happen.
Right. Yeah, we've had some extenuating circumstances like we did a couple years ago with Ellington, and that's why they're with us. But, it's hard to get out of it when it happens. But these that are typically running so late, it's
and Bethany looks like they're getting worse and worse.
Right.
They're ramping up.
Don't each of the towns have to submit a request for another each month's extension?
Yes.
Yes.
Do they provide any context?
They do, but the problem with it is from 1 month to the other. Once we think one item is cleared up, all of a sudden the next extension lists 2 other items, and so it's hard to get a good understanding of if this item is done, that's it. because now it opens itself up to other. And we you know, we've been, due to the last couple of years with COVID, we've been a little bit more lenient, but some of these are, again, are, you know, not the, it's just the typical, there's a reason, there's always a reason for these
Yeah.
towns, 100 days.
But, you know, Bill, the COVID, sorry, we had our audit was done completely remotely and on time. In fact, not just on time, but it was early. So it's not, and you've got what, 13 here? So there's 150 other towns that got their reports in on time. I think just, you know, a letter coming from the commission that says something about, you know, we notice that this, you know, once again, you're filing late, and please give us the reasons why you're late and what steps you are taking to make sure that you're not late next year.
Yeah, so we could draft a letter, and also we'll give you a list of the towns we suggest, and we'll provide you this list in
Okay.
case you want to take one off or include another.
Okay, awesome. Thank you.
And I would just highlight, I mean, a couple of them on the large city side, it's surprising, and I don't know if it's correlated to it, but so New Haven has a new mayor, and on the flip side, Danbury has a mayor that has moved to the state.
What has that got to do with your audit
Yeah,
report?
the
though?
mayor.
How much does your mayor have to do with your audit report, Mike?
My mayor would be on me in a minute if he found out that we were late filing our audit report.
Yeah. I mean, Waterbury's not late, Bridgeport's not late, Hartford's not late.
And I say that because of the political consequences, not.
Yeah, so I think, you know, look, there might be very valid reasons why they're late.
Okay.
But, you know, just to let them know that there are eyes on it and to make them think about next year's, or I should say this year's, you know, because we're fast approaching June 30, 21, you know, what provisions have they made to try and get that one done on time? All right. How are we doing with our online portal? You're going to give us an update?
Yes, definitely. Thank you for asking. We've continued to work, you know, fast and furious on it. And actually the portal went into, I'm going to call it a production stage this week, but it's production with a testing. So I did not want it to go out to the towns unless internally we tested it first, and then we will then scrub the data to get ready to move forward. Hoping in the next week or two, if the commission is still up for a beta testing and environment, and you wanted to bring your town forward, would love to get on the calendar and set up a time, and we could make it a working meeting and bring your financials forward and let this commission be the first to actually enter your data into the portal. Your thoughts?
Anybody?
I think it's a good idea.
Perfect. Perfect. Then what I'll do is I will have Mike Reese, who's on the call, reach out to all of you, and I'll let you know the dates that we can coordinate with our IT group and have you bring forth your financials, and then we'll start to coordinate that.
Okay.
And that will be in the next week or two. I'm thinking it'll probably be, Bill, what do you think? It might take a hour and a half, maybe to 2 if you want to make sure that we discuss it. And I would love your feedback as well before we go live with everybody.
Okay.
Maybe we'll log 2 hours like we do with the board meeting, and then take it from there.
I just tell you, the week of the 17th would be difficult for me.
Okay.
I have employee evaluations all week. So.
Okay. How does your next week look?
The 24th looks pretty good.
Okay.
That week of the 24th looks pretty good.
Okay. How about next week? Like the 12th or the 14th?
The 12th, the morning would not be good. And
2 o'clock.
Yeah, the 13th, I'm not available.
Okay, I'm looking for 12th and 14th at 2 o'clock is what I have open at this very moment. If
Yeah,
that's
we
good
don't
for
we don't do Fridays in Darien anymore.
Got it. So we will
We have a
knock the
4-day
Friday
week
off.
now.
Okay. Oh, nice. And we'll come back and poll. I do want to let everyone know that a letter went out under my cover requesting that we get requesting that the executive officer would create who their primary person to administer the system would be. We wanted all of the mayors or first selectmen to make that selection, so that has gone out and has come back, and that's been appointed because we are really making sure that we put in proper controls with the new system. And secondly, the appointment of auditor will be the next item, and we need to get towns in to make that selection. We want that to happen instead of paper. Once the town has selected who could have the administering rights, then they can get in and when we go live, immediately select their auditor within the portal and be fully electronic. So that is our first rollout. And in addition to that, we would then be training on the budgets so that when the budgets get adopted, we would have that get handled and then start our cycle for the year.
Okay. That sounds good.
Bill or Mike, or I don't know if Morgan is with us. Anybody else here that would like to add that I might have missed on the fiscal health monitoring system?
We need a better name for it.
Why? We love it. No?
No, we need something like, that's catchy.
Oh.
Like Emma.
Emma?
Like that. That was kind of easy to remember.
Yeah.
Okay.
Well, we'd have to take that into consideration right now because we actually have a website set up with that. We actually have
I'm just
emails
joking,
set up with that.
I'm just joking.
Okay, thank you.
Okay.
My IT might kill me at this very moment because I already made them change it once. Because first we called it fiscal stress, and I'm like, no, it can't be stress. We have to remove that stress to health. We're looking for fiscal health, which could then be positive health, right?
That's right.
Very good.
Okay, so
Thank you.
West Hartford wants to issue POBs. They have.
For the record, I'm the actuary for that.
Can you want to give an update on that?
They haven't sold the bonds yet.
Okay.
The town council has approved the issuance of the bonds. So they're in the process of they've got the calendar set up and the plan set up for bringing them to market, but I expect it's in the next couple of months the bonds will actually be sold.
Perfect. We are anticipating another one coming down the horizon, right? Is that true, Bill? Do we have one more?
Yes, another town has told us that they're. I don't know if the legislation is passed because they already have a bond issuance POB outstanding. So I don't know how much details you want to go into that. So
it's just helpful to let the MFAC know that we have it on the horizon.
Okay.
It's obviously a hot topic with interest rates so low. I would be unsurprised if there weren't a couple more that bubbled up over the next couple of months. We're in discussion with a couple of our clients about issuing POBs.
Thanks, Becky.
All right. There is no other business. A motion to adjourn would be in order.
So moved, Kim.
Second, Becky.
All those in favor?
Aye.
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 All right. Thank you. I think this has been a very productive meeting.
It is.
It
This
was.
was
It
a
was very
heavy
productive.
meeting and we got through a lot today.
Yeah. it
Thank
was.
you, Kate.
Thank you.
Okay.
Great job.
Thank you all.
Everyone
Thanks.
enjoy the
Bye, everyone.
day.
Bye-bye.
Bye-bye.
Bye-bye.